All right. In this video, we are going to go over how you can ace your VC call. Now, the first thing to understand is that it's all right to feel the way you feel about this opportunity or these investors or your business. However you're feeling, people have felt this way before, and you're on your way to doing something great if you have a VC call scheduled. So we are going to go through, from an overview perspective, the assumptions, the structure of a VC call, next steps, and closing. The last two we're over-delivering here. We're going to go beyond the call because it's more than just the call. You want to close capital. You want to raise money for your business and build an awesome company. So let's go ahead and get started. So the assumptions. The first and most important assumption is that they are interested in you. If you have sent out your messages, you've sent out your teasers and all those sort of things, and they're jumping on this call with you, they are interested in you. No matter how they feel on the call when you're talking to them, no matter how you are maybe projecting your emotions onto them about the anxiety or the nervousness that you're pitching your company, or maybe you're a pro and you're ready to go, either way, just realize it's an important fundamental assumption. They are interested in you. The next one, and this is going to determine how you interact and how you really go for that close, is the next assumption is that they can invest in you. And the key thing about this is that you control it. If you are accurate enough with your targeting, you put the research into each contact, each investor, their previous investments, look at their Crunchbase, look at their website, their social media. What are they talking about? What are the conversations? You must focus on those who can invest in you. Don't waste your time with people who might or they could, because in my experience, it just doesn't work as well as just focusing on the ones that really can invest in you. So if that is the case, if you put the work in up front, keep that assumption in your brain that they can invest in you, no matter what they say. If they say, hey, we don't have a fund open and we haven't raised any money yet and we're new, and maybe you get the sense that aside from that, they've already deployed other capital, they're in the process of learning VC themselves, which does happen. There are those experiences, but the core assumption is that they can invest in you, because you'd rather assume that they can and bring that energy and treat them as if they could than treat them as if they couldn't and lose out on an opportunity. So the next is they could deliver in a much faster time frame than you think. So it's very common if you go out and you're just raising your first capital that you don't know how the process works, you don't know how fast people can move, and you want to be too lenient on putting expectations on the way in which they give you an answer, on the way in which they are able to move forward and invest or commit to an investment. You think that while you're investing $1 million, let's say it's 10 times more than what your average client gives you on a yearly basis. So you think the decision should take 10 times as long. That's not the case. And in fact, the more sense of urgency you can build and the more traction you can demonstrate and the more investors you can get interested, the faster everyone's going to move. It's a paradoxical situation that if you understand and use it to your benefit, it can drastically improve not only your company building success, but the way in which you enjoy and experience this whole process of raising capital and growing your company. So the next one is more of an internal assumption that we're going to make, and that is make the firm decision in your mind that you are going to show up for that call. And not just show up, but really in your brain, you are going to be there. You're going to be dialed in. You're going to give your best, and you're going to show up and be ready for the next piece here. Whatever question comes your way, when you make the decision that you're going to show up and you're going to be there and that you can handle whatever question that investor asks and that you are going to raise that money for your company, whether it's from them or from somebody else, if you have that level of confidence and awareness that, hey, if your company's amazing, your team's awesome, your product is great, you're getting a lot of interest, it really is that intangible factor that this is so exciting that investor wants to be part of it. They want to move forward with you. And that's just an internal checkbox that you're going to now tick in your brain. So let's get into the actual structure of VC calls. So after over 1,000 at this point calls, this is the structure of VC calls in such a large majority of the cases. So you have your initial hellos. There's a bit of rapport. Sometimes it goes 4 or 5 minutes, maybe, if there's some similarities or affinities or just you guys are in a good mood. Then from there, it's going to transition. It's typically an investor intro. So the investor gives the intro. That's how you want it to go. And I'll tell you why in a minute. You want the investor to give their intro about themselves and their firm. And then you're going to ask qualifying questions or just clarifying questions about what is your check size. If you can get them to say, hey, this is how we've made investments in the past, those sort of things. We made the fastest we made an investment is 2 weeks, or what have you. If they can lay out their process, if they didn't in that initial intro, it's going to help you a lot, because then it can inform the way you're pitching, and then it informs the rest of your capital raising process. For example, if you're raising $10 million and this investor can do 250,000, then that's where it can fit in my round. Here's my lead. And then you can think about and communicate some of those other opportunities where they fit in the mix. So then you are going to ask permission and say, all right, awesome. Sounds great. Makes sense to me. How about I go ahead and share a pitch with you? And then, or something of that nature, where you're just going to ask permission and get right into that pitch. And from there, it's up to you on the timeline. We could talk about the specifics of the deck. We could talk about all the other things, but there's a broad range. You could have a short and sweet presentation. You could have a long presentation. Really just depends on that investor and the way you are with your company and the opportunity, whether it's an advanced tech opportunity and there's market education that needs to go on or not. If someone's very technical and you can tailor your presentation, that's the key though. In that intro section where they're talking about themselves, you want to get that information, because if they're highly technical, they're going to be looking for that information to stand out much more than someone who's simply opportunistic and really is looking for a great fundamental opportunity. Next. All right. So you're going to deliver that pitch. Again, know the time, whether you have an hour or you have 30 minutes. I will say I now have changed to booking hour-long slots, at least 45 minutes, honestly, for the first calls. Couple reasons for this. The first of which is that almost all the calls, if they're good, go over 30 minutes. And that's just, it's one of those things you learn along the way. Almost all of them go longer than 45 minutes. Many go an hour. So I like to just block off an hour. It shows that there's commitment on their side, commitment on your side, that this is probably, they're putting some level of priority and effort and attention and energy in. And that would be the second factor, is that from both sides, you're able to go really in depth. And at that point, they have answered, rather than just with a 30-minute call, they're getting 2 or 3 questions answered and deciding if they want to move forward. They're actually able to build that story in their mind with you, build a relationship for another 20 plus minutes, where they have exhausted all their questions, gained excitement about some of those risk factors or apparent factors that might come up when they're presenting it or you're presenting it, that once they have that clarity from you, they're able to go to their firm and be more excited and be more aware and be able to answer those questions, which is important. That person needs to feel confident that they can answer any questions that come forward, or that you can, which is another piece. So once you're done delivering your pitch, you're going to hit your ask slide. I've mentioned this before, but when they ask questions, let's say they want go-to-market information, go back to that slide. Visual audio, again, gets that. And then the more you are in the experience, the more energy you're resonating, you're also going to get that kinesthetic factor where they can just feel your excitement. You've ever been in a call or a room with somebody, you can just feel their excitement. It happens, it works. So that is the component. So you're going to go to that slide, because then they get the visual information in their brain. And then you go back to your ask slide, because you're keeping it relevant, keeping it contextual, keeping it focused on what the next step is. Now, so you're going to answer whatever questions come your way. And then they're going to typically propose next steps. So if the investor is very interested, they'll say, this is awesome. I'm going to go talk to my team. How about we connect again on Thursday? That's an ideal case scenario. Or, hey, let's set another meeting. I've got time. Maybe if they're the general partner, hey, I want to have my other partner on the call. Let's meet on Wednesday. If you have that experience, great stuff. But as part of those next steps, nearly in every case, you're going to send something next. So let's get into the next piece, which is the next steps. And this is where we're going to over deliver on this video. This is where the money is. So in the next steps, the key is to have prompt and immediate follow-up. So if they request, hey, I want to see your technical presentation, the deck looked great, the normal pitch deck looked great. How about you send me your technical deck or your commercial presentation or anything of that nature? You want to get that back to them as soon as possible. And ideally, this is a time where contextually, of course, I like to over deliver. And if they want to see your technical presentation, you also include a customer testimonial that highlights something that your customer loved about your product from a technical standpoint, or anything of that nature, which just makes it gives them that energy that, hey, other people are excited about this too, not just the founder, not just me, other people are excited too. And then if the call goes very well, just drop the data room in there and send it ready to go. Your non-confidential data room, just send it over there, because you're giving them all the information that they need to make an informed decision. And you're just checking that box like, all right, we're moving forward, and you're giving them if, for example, they want to see the technical information, but their co-partner wants to see the commercial presentation and you have your pitch deck, right? So if you just send your pitch deck, then you're just leaving more friction in the area versus saying, hey, here's our data room. You can actually find everything you need in there, because then you never know, you might have an analyst that wants to know about the financials. And when you do that, you've actually given the firm everything they need, no matter what angle that person or investor is coming from. Immediately after you send that, track and log the details in the system. So whatever system you use, track and log the details. Wanted to see commercial presentation sent, going to follow up on this date, whether it's your CRM, Google Sheets, doesn't really matter. Simpler is better in my experience. And this way you get into the most valuable piece. And please make sure you do this. Be one of these people, please. And that is connect again with traction-based follow-ups within 48 hours, 24 hours, within that time frame. Just get back to them and say, hey, really enjoyed the call. Here's something great that happened since our call. And you just got to find those things in your business. We just brought on a new team member. It's really exciting. Usually it does matter here, quality. It's not just about doing it. Quality matters. If you can say, hey, we just got another big company to sign, or we just got another commitment from an investor, you're just giving them that energy to move forward. Obviously make it real and tangible. But the other thing is here that I want to expand on from what I wrote is that make sure if you say you're going to follow up by Monday and you pitch on Thursday and you say you're going to follow up on Monday with a piece of information, ideally deliver before then. That's going to help you. But absolutely, please, I didn't know. Wow, now there's a bubble here. That's interesting. Absolutely make sure that you do what you say you are going to do. Because if you do, this is what differentiates you from everybody else. If you come there and you do what you say you're going to do, you follow up when you say you're going to follow up, and you over deliver, that builds trust. And this is what it's all about. You have to hit that. And I even get to the point where I am over delivering and overdoing this. And I mentioned that, but I promise you this will drastically improve your success. Over deliver, be early, remind them. Even if you already followed up, hit them again on the date you said you were going to follow up. Say, hey, I'm just checking in because I knew I said I would follow up on this date. Any questions I can answer for your firm? Any questions I can answer for you? What are the thoughts on the next steps? We just got this. Remember, traction-based follow-ups. Those things matter because we're giving them that energy, showing them people are excited. They'll stay excited. Now, closing. This traction-based follow-ups thing, I'm the one who created it as far as I know, just from realizing what works. And traction-based follow-ups is not a one-time thing. It's throughout the entire process. Whether someone said yes to receive information and they're waiting to book a call, hit them with a traction-based follow-up. If someone is in the closing stages and they're waiting on a term sheet, hit them with a traction-based follow-up. If someone is writing you a term sheet, hit them with a traction-based follow-up. All these sort of things just show you're there, you're present, you're moving forward, this deal's moving forward, and it's exciting. Final ones here. Continue, remind of next steps, and persist. This is encompassed in everything I just said for the last few minutes, but it is so valuable. The next, have options. Make sure that if you have a group of investors who are very interested, that you have options, whether that be from a term sheet perspective or that if someone falls off and drops off, you never know. Just always have options, have an abundance of opportunities, make sure that pipeline is flowing smooth, and you're going to have a lot more success. And let's get into the final one. If you do not have a lead yet, focus 100% on securing a lead. It will save you tons of time and headache. And once you get that lead, everyone else is going to be more excited. So there you have it. That's how to ace your VC call and more, to go through to those next steps and get closer to that close and get the close and the cash in the bank so you can build a great business. Go ahead, like this video, and I will see you in the next one.